Hey everyone, and welcome to Investment Tuesday. Um, Sometimes you find an opportunity that is, I don't know, so obvious, at least to me, so clear that you really want to just go out and tell everybody. So this is that opportunity. This is that video. I was doing some work over the weekend and thinking, well, what am I going to say in my YouTube? What I'm going to write in my Substack? What am I going to tell people about? Because remember, as a content creator, as an idea provider, all of y'all expect something new, something interesting, something potentially profitable, yeah, to make you come and watch this video every week. And this week, I really, really love this idea. I mean, it just seems so obvious, so clear, so you just look at the evidence. You're like, of course, this is going to happen. This could happen today. This could happen tomorrow, and most importantly, it could happen for big money. For big money. All right. What am I going to talk about? Well, let's do the legal disclaimers and disclosures, and then I will tell you this is a stock I think could get taken over. If you are new to markets, you're like, what is this takeover, Paul? What are you talking about? Well, a takeover is when a big company takes over a small company, most of the time. Sometimes small companies take over big companies, but most of the time it's a big company taking over a small company. And when that happens, the price of the company the stock price of the company that is being taken over shoots up overnight, and you get to cash out. Sometimes the gain is 20%, sometimes it's 30%, sometimes it's 50%, sometimes it's 100%. Whatever it is, it happens pretty quickly and it's big. And I know that among human beings, and I think we're mostly among human beings, there might be some aliens among us. We want fast gains, we want big gains, we want them now. And this opportunity, I think, delivers on all three fronts. All three fronts. So stay tuned, and I am going to just kind of lay out the opportunity, tell you why this is imminent, because it's pressing. I mean, companies take action when they're under pressure, when there is some need to act, when they themselves feel that risk, like we can't just do this, right? Okay. Let's do legal disclaimers and disclosures and then get into the details. First one, this video and the content from ATG Digital is not investment or financial advice. It is presented to you as opinion, information, engagement, and entertainment. Whatever you choose to do with it, it is your responsibility because it is your money. Next. All ATG Digital content may contain errors, oversights, or mistakes. Do not expect perfection from me or from us. Understand that investment operations have significant risks and can lead to the loss of your principal. Fancy way of saying you can lose money. You're not guaranteed to make money just because I am making this video. Next up, I, the owners, employees, contractors of ATG Digital, own, trade, transact in the securities that are mentioned in this video and all content from ATG Digital. And if you dislike that, don't want that, now is your opportunity to turn this video off and move on to somebody else. There. Finally, we do not take money from companies or crypto promoters and sponsors to recommend their stocks or crypto tokens. This is now, today in 2025, a widely done, accepted practice. You are required by, I believe, law to disclose. If you do, we disclose that we do not take this. So for better, for worse, for gain or for loss, whatever you're getting is our unique, independent viewpoint of this opportunity. Finally, if you like this channel, we produce other content. I have a Substack that goes out daily. You could obviously also access it through the website, which is, it's going to scroll underneath here. Hello, come on, move. Where's the substack? Oh, there we go. Oof, takes forever. Freak. Oh my God, this is so slow. Is there a way to speed this up? paulmanpilly.substack.com is where you can go for essentially a free e-letter. Yeah, I mean, it's a free newsletter. We don't charge anything, and we actually like spell out real opportunities like this one. I've got a podcast which is now on a monthly schedule. So if you are a Ballman Speculating fan, we now have an assigned date. It will go out monthly. I am on the clock, on the calendar, to produce a Ballman Speculating episode this Wednesday, which will then get issued. And from now on, Ballman Speculating, I'm committing to a monthly schedule. So something to look forward to. And then finally, this YouTube channel where I'm on every week. Social media, X, I am on pretty regularly. Instagram is essentially like a Tesla and Bitcoin update, and periodically travel pictures. And then Facebook, we cut and paste and put up things from time to time, especially when there are exciting events unfolding among our stocks and opportunities. Finally, a plug for subscriptions for ATG Digital Media. So that's the company that I represent. It's my company. And if you like our approach to markets, looking for opportunities to either buy and hold stocks and or trades, we've got two different sets of types of subscriptions. There's buy and hold subscription tiers or levels, I suppose. And then we have one trading tier. Check us out at atgdigital.media, where subscriptions begin at $9.99 per month. And the way to reach us, because I'm always amazed that in the comments will be people, how can I subscribe? atgdigital.media. There are still people that don't know that I am no longer with this now almost like 3 years ago, my old publisher, Bain & Hill. I am now off on my own, and the way you can get my ideas, coverage, essentially all the same things I used to do is at atgdigital.media, so go there. All right, enough of all that, and let's get to the opportunity at hand. Let me set up here to put some things on screen. Okay, let's start with the big picture. All right, let's go from here down to here. All right, which is that big pharmaceutical and biotechnology companies face this thing called a patent cliff. In other words, they're here and down here is a big jump down because pharmaceutical drugs have a certain life when they face no competition. And that is because of their patents. And it is somewhere in the range of 7 to 10 to kind of 12 years. And at that point, a new competitor comes in, and what happens? Well, if you were charging $4,000 for your drug, yeah, now with a second competitor, the price will get half to $2,000. If there's a third competitor, it'll go to $500. If there is a fourth and a fifth competitor, it'll go down suddenly to $200. Yes, the same drug that was selling for $4,000 suddenly with competition, yeah, it's just essentially wiped out. So these companies have this major problem, which is that they've got $183 billion with a B, $183 billion that are subject to this patent cliff coming through 2030, which seems like it's far away. 2030 sounds like it's far away, right? I mean, we are in 2025, so you got 2025, 2026, 2027, 2028, 2029. Sounds far away, but it's not that far away for a pharmaceutical company when you consider that it takes 20 years to get a drug from when they first find it go through all the preclinical tests, go through all the clinical testing, go through all the FDA process, approval process, and then bring it to market is 20 to 25 years. 20 to 25 years, right? So they cannot just flick a switch and be like, new drugs, we got new drugs, we got new drugs for everybody. Can't do it. Can't do it. So what can they do? What can they do? Well, before I tell you what can they do, some more. Here, this is an article from 2025, which is that some of the biggest drugs, like there have been patent cliffs before, but in this patent cliff, we have some of the biggest drugs, like this drug here, Humira. Yeah, I mean, look at that. It sells nearly 20 billion per year. What about some of the others? Merck has this drug called Keytruda, which also sells in the billions. So we've got all of these drugs that are coming off patent, and we're starting to see companies slowly beginning to act. In January, Johnson & Johnson bought out this intracellular therapies for nearly $15 billion. And let's see here. What did intracellular therapies stock do when Johnson & Johnson bought them out? Oh, look at this. The day before they announced it, you can tell obviously news was leaking. All right, let me make sure I'm going to increase the size of this chart so everyone can see it. And also so when I crosshair it, you guys can see. Obviously the news leaked, on January 9th. And by January 10th, the market's reacting. So really the price movement is from the day before, which is it closed at $83 before the announcement. And on the announcement, boom, $128, like 50% in a day. In a day, right? So that's what happens when you have an acquisition, when you have a takeover. One company, in this case, a giant like Johnson & Johnson, says, hey, I have this problem, and how can I solve it? Well, one of the ways you can solve it is by buying another biotechnology company with ownership of a large potential opportunity drug that is also selling billions, that will continue to sell billions in the future. And they're like, I want to own this thing in full. And they go to buy the other company. When this big company buys a smaller company, they got to pay up. They got to pay up. Why they got to pay up? Well, hey, the people who own the smaller company, they're like, we don't want to give this to you because we also know that this drug can sell in the billions for many, many years. And we are giving up that future upside for a one-day upside. And then boom, you get this 50%, $80 to $125 overnight. And that's the kind of opportunity that I want to put in front of you today, right? Front of you today, which is that I got a company that's like for the last 4 quarters has a drug that is just growing like crazy, is growing their sales like crazy. But yet, because the mood in the biotech market, this is just not like, like there are periods of time when investors and speculators love biotech. They just like can't get enough of it. But we have not had that market in a while. Just haven't had that market in a while. Because I can tell you, if we had that market, the stock would be way higher. Way higher. Because let me see here. These are the last 3 quarters. Their sales growth is 140%, 126%, 103%. And yet, if I look at this stock, and yes, I will tell you what it is. I will tell you. In the last year, if I were to guess and you told me, Paul, hey, There is a stock that has had 3 continuous quarters of a 100% sales growth in this market that is crazy for growth, but only in technology, not in biotech. I would say this stock is up 150% this year and is trading for 30 times sales. Nope, 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 nope. It does tell you, like many people think, that the market is a real-time calculator of value. It is not. The market has certain preferences. During certain times, it will build certain companies up. Other times, it'll be like, I don't really care. Whatever you're growing, it doesn't matter. It's irrelevant because I'm focused on whatever the hype trade of today. It might be AI, might be crypto, might be something else. But if you know that sector industry, and I know biotech very, very well, having been assigned to cover it really in my very early days. Yeah. Takeovers and acquisitions are one of the ways to make big money in biotech. And you know what? My instinct, my senses, my tingly senses say something's going to happen with this stock. And it's going to happen soon because of what I laid out, which is that these companies are facing a patent cliff of a huge magnitude. They've got blockbuster drug after blockbuster drug. I mean, drugs that sell $20 billion per year that are coming off patent. They got to replace them. They got to replace them because what will happen to their stocks? What will happen to the stocks of these companies, which have been flying high after 3 or 4 years of big company stocks just going up, endlessly? Yeah, I'll crash. So they got to act, and they got to act now. They got to act now. If they don't act now, the patent cliff will come. Their stocks will crash. There will be all kinds of problems at the company level. The CEO will get fired. Something will happen. So there is the personal incentive to act by the CEO, the CFO, and others. There is the business incentive and imperative to act. In other words, there's a problem there. And lucky for them, biotech has been in a bear market for 10 years, so the assets are pretty cheap. Assets are pretty cheap. So I think you've got tick, tick, tick. I think we're going to see something happen here. All right. What's the company I'm talking about? Okay. The company is Blueprint Medicine, ticker symbol BPMC. BPMC, Blueprint Medicines. Let's look at some of the numbers that I was citing to you earlier, which is, let's look at its quarterly growth numbers. Look at this. Just look at this. Look at this. 103%, 126%, 140%, 51%, 85%. Yeah, it had one down quarter, but prior to that, 57%. This thing has been growing like a weed. Why isn't it being bid up? Let's look. Does anyone know that Blueprint's around? This is the 1-year chart of Blueprint. Flat for the last 1 year. What is the market doing? Are people asleep? What are they doing? This thing should be up 50, 70%. Maybe it's manipulation. Maybe what's going on is that the bankers are like, hey, we can sell this company to one of the companies that are experiencing this patent cliff. And so we'll just knock it down. We'll push it down. We'll push it down. Because you know that us, regular people, that stocks, we go by our feelings. Stock price down, we're unhappy. Stock price up, we're happy. So if you're one of these insider market dealers, investment bankers, and you're trying to sell the company, do you want the stock up or down? You want it down. You want it down. Why? Well, now you can pitch it to another company and say, hey, this company, this Blueprint, they got crazy sales. and we can sell it to you. Like, we can knock this company down. Right now it's got all these sales, and it's selling for 11 times sales, 11 times sales, which, hey, we've got tech companies that are growing at 15, 20%, trading for 70 times sales. 70 times sales. What's 11? Especially when you control a drug that is generating $400-500 million and has, huge growth ahead of it. Let me bring up my Substack, which is really worth following me on Substack, folks. Oh, that's going to be published today. And I'm doing this on Monday, so it's not published just today. I'm still getting used to recording these one day before. But in the Substack, you know what? Let me show you the blueprint. Let's go to the investors and media page. Let's look at what the company is telling investors, which is that currently they're on a run rate. In other words, this is what they can tell based on the past, based on their understanding of the market for their blockbuster drug, which is Ava Kit. I don't know. Hey, I mean, they have this oddest names. But it's, in 2025, it's going to be between 680 and 710 million. And they project that they're going to get to nearly $4 billion. Do you think one of these big pharmaceutical companies wants that? You bet. Because you know what? Yeah, I mean, 2 billion, 4 billion, that helps. I mean, they need big drugs. They need big drugs, right? So we've got a lot of things aligning for Blueprint Medicine. I'm going to put this tab up again and share it. I think to become a target for big pharmaceutical companies to come and to bid the company higher and to ultimately get taken over. How big could it go? Well, Blueprint Medicine, if we go into their financials, right, we can see that of the value of the company, I mean, it's nearly 600 million is cash. So, 5.9 million is the value so far of its business, but they have control of this drug. And then one of the things that we'll go back to here is that they also have a lot of other drugs that are in their pipeline. Let me try and get quickly to their pipeline. This is their pipeline, and they've got all of these drugs, which are for, major diseases. So when a larger company is buying, they're obviously buying the revenue potential of the existing drug, but then any of these drugs could potentially also be very, very big. So what's the bottom line here? Well, we've got a major event happening in an industry that is out of favor in the market. And what is out of favor? It means that investors and speculators are not focused on it. And when investors and speculators are not focused on a particular sector of the market, it tends to trade at lower price levels, lower valuation levels, really just as a function of human attention. We're all consumed by the idea of AI or something else. And so we don't really care. Like, oh yeah, you can have, all this growth. We don't really care. But that is an opportunity for companies in the sector, right? Biotechnology companies, pharmaceutical companies to go get assets on the cheap. And Blueprint Medicine, in my opinion, in my judgment, is the kind of stock that if I was on Wall Street, I'll be like, yeah, I mean, the the shape of this chart for a company that has grown its sales by 100% for 3 quarters in a row. Yeah, I mean, if this was a tech company, it would be trading at 30 or 40 or 50 times sales. So instead, it's trading at 11 times sales. Then we know about the patent cliff, right? The pharmaceutical companies, they need a company that has current sales that can grow big, and then pipelines, to produce more blockbusters in the future. And then, yeah, this price action just smells of manipulation. Smells of manipulation. Because you know what? Can the banker sell something that is trading at 70 times sales? Yeah, no. Yeah, sadly, the managements of companies ain't dumb enough to pay 70 times. Well, sometimes they are. But 11 times sales for a drug that's growing 100% every quarter, I think you can get a lot of people to sign up for that. How high could it go? Well, look, I mean, J&J just paid what? 11, what do they pay? Let me just see here. They paid 14.6 billion for this intracellular company. And let's see, intracellular. Let's see how much they have in sales. I'll share. Yeah, here's intracellular sales. So about the same size. At 14 or 15 billion. And I will say one thing, which is that Blueprint Medicine, is in the cancer business, which generally commands an even bigger premium. I mean, this could go for, almost between, I'll say, double, maybe 11 or 12 billion, which would be 100%, maybe 120%. All right. Let's close this down. Bottom line, major problem in pharmaceutical biotech, for mega cap companies in those sectors. They need new revenue to replace revenue from this patent cliff. We've got a lot of biotech companies, including stocks like Blueprint. There are others, and I will be putting those up in my Substack. So I recommend you subscribe to Substack, that can get taken over to fulfill this problem. And this sector is cheap, so the companies can pay up. So that means that we can get nearly instant 100, maybe 150. Hey, if we get lucky, 200% gains like this. All right, that is the Investment Tuesday video for today. I hope you liked it. It is for Blueprint Medicine, ticker symbol BPMC, potential takeover target. That even if it doesn't happen, it's a company growing at 100% a quarter, 100% a quarter, trading for 11 times sales, which in this market is nothing. So, I mean, maybe the takeover doesn't happen. There's no guarantees of that. Still, growing like a weed, cheap in a cheap sector, in a market that is seeking out growth. I think a lot of ways to win. All right. Thanks for watching. This is Paul saying thank you and goodbye.